following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And was just instant messaging with Andy Heck here before the show. And I said, he writes a lot of those articles. I said, I'd like a title that said, may you live in interesting times. Of course, the Chinese curse. And we certainly are living in interesting times. Right now, as we start the show, let's take a quick look at the indexes. Normally, I only look at the S&P cash because it's actually a fairly decent representative. The IWM would be another good one, or the Russell, 4,000, 5,000, 5 billion. Wilshire used to be real good because it was a wide branch, but they started charging everybody a huge amount to cover it. And I don't know if anybody even talks about the Wilshire anymore. But as I digress, as I often do, 1998.82. And let me check real quick. I don't think we hit yesterday's low, 1888. Got to 1992. Going to be very interesting how this market closes out. But there is a slight bullish bias just till Friday's close. But after that, I think we're going to have a lot more destruction. That's going to come next week. And I've got some warnings out there for people that think the Fed won't come in and intervene again. I would say I think you're going to think again. I think the market's going to come down a lot farther before they do something. But I wouldn't be sitting on monstrous leveraged positions thinking that the Fed wasn't going to do anything. They probably won't do much. But I think that they can probably make late to the party shorters life a little bit more miserable than it has been in the past. But anyway, you can always call me at 877-927-6648. You can email me at path@tfnn.com, and I'll try to get your question answered on the radio. And you can post a message in the den, as always. So there's three ways, a hat trick of ways to reach me during the show here. And of course, we're going to get into a lot of that today. So why don't we just do our little history.
And it's all just a little bit of history repeating.
And on this day in 1987, the New York Stock Exchange racks up a daily volume of over 250 million shares for the first time, as a total of 253 million shares are traded. We trade on all ECNs and everything, probably 400 or 500 million shares in the first 30 minutes these days. But it wasn't that long ago that volume was rather scarce, and much higher today than it was before. If you think you've got a stinking stock out there, I brought up this a little bit, but I wanted to show the chart of it today, and you can find it at coindesk.com. This is the chart of Bitcoin, and it got down to $174 this morning, and that's roughly off 43% of its high on January 1st. But a good indication of just how some of these things are going to be extra volatile. And as William Buffett says, when the tide goes out, you can tell who is swimming without their bathing suits. Something with no backing behind it other than the trust of other people seems probably misguided. And maybe there'll be a better version of Bitcoin come in the future. But right now, looks to me like a fad in the works. And I don't know what else you could say about that. Of course, we had some fairly horrible news in the market from market participants. Overnight, we had the Swiss come out and revalue their currency. And just to see how big this was, Novartis, which is a big pharmaceutical company, which is in Switzerland, and I've been into Switzerland several times, and maybe we'll get into that later. Maybe the time I met the Nazis hiding out from World War II, still up in a chalet up in Montreux, Switzerland. But Novartis, up 3% here in the United States earlier, at least at around noon. Down 10%, though, if you were in Switzerland itself. So currency is becoming a bigger and bigger part of the move and pushing cash both into the Forex markets. But the bank shot there, of course, is how it affects the markets themselves as Novartis. If you're on this side of the pond, up 3%. If you're on the other side of the pond, down 10%. And we can do everything. Now, the Swiss, of course, came out, and even the president of the EU right now, what's her name, Lagarde, who was talking smack about midday today, around noon on CNBC, about the Swiss not giving her the heads up. Kind of an interesting thing, and I talk about game theory probably once a week on this show, because why it is called games. It's not tic-tac-toe or some game that your 8-year-old is playing. It is a way of mathematically thinking about the best outcome for multiple people, one person, and how things work. One of the initial papers on game theory was called The Prisoner's Dilemma. That was, if you had two people that were most likely guilty, but you couldn't or didn't have enough evidence to prosecute either one of them, you would try to give an offer of a lesser sentence or no sentence to one to get the evidence on the other and break them apart. Hence the prisoner's dilemma. That is, if both guys just shut up, they're both walking out in the next 48 hours. But if one person talks, maybe someone gets a very small jail time, but someone's going to get a big one. And the idea is always to play one against the other. And since that paper, it's been used very effectively in talking about the issues with multiple people trying to come to a conclusion when one wants to get back out of the marketplace. Did I say Steve Rode wants to ask if I ask about soup Nazis? No, these are real Nazis hiding out in Montreux, Switzerland, up in a chalet. And we just happened to get on the wrong car that went up. It's like the ones in San Francisco that go up the side of a mountain that have the gears in them. Well, we got in the wrong one. We were thinking we were going to one chalet to eat dinner, and we got in the wrong one. Went to another one, and there were a bunch of people up there with oompas and Nazi swastikas on their arm. We got out and got the bums rush right back down the same thing, but actually stumbled into a Nazi party there. Most people don't know Switzerland is actually a country of 3 countries. It's on the border of all of Italy and France and Germany, and all 3 languages are spoken. And depending on where you go, you will run into a town that speaks Italian, or sometimes French, and sometimes German. So kind of a tri-state boogie. And anyway, I could get in to spend the whole day on the Nazis, but that would probably be counterproductive. We actually have somebody calling in. It's Danny from Atlanta, so we'll go to Danny. How you doing?
I'm doing just fine, Dave. How about you?
Pretty good. So what do you want to talk about today?
Can you look at the GLD options or the gold futures options for the sweet spot for expiration?
I can if there are. I hadn't looked at that. Normally, the futures override what in the gold what the options do in the futures, but maybe I'll have to take another study on this and see. Well, the maximum pain is 126.
In the GLD?
That, in fact, are you watching on Tiger TV?
Yeah.
Okay, well, I've got it in the Den and Tiger TV both. But yeah, the bias was all the way up here. Once it broke, this really did start to change over the last few days. And so your bias is up until the close of tomorrow's close. And, you know, you don't have that much more going out into February. It's just a little higher. So you don't have if this thing would be like 135, I'd say that you probably have a continuance. But right now, you've got a lot of people that look like they're on the wrong side of this trade. I was for a very short amount of time. But if you are looking at it, GLD certainly has much higher to go. What is, in fact, let me take a quick look. GLD is at 120.87. Your bias, probably not going to make it to 126. But normally, the last couple of days like this, you can split the difference. You would probably say that if you had options that expired yesterday, if you could get 122.25 out of it, that's probably where you'd want to be selling it. At least from the options, what options are telling you anyway. Do you have options on it?
No, I don't. Just looking for the general direction.
Well, the bias is certainly up. And I can't see a lot changing that. One thing that really is still just amazingly confusing for me is the dollar index and how everybody's been trying to beat it down at 92. And I don't know if it's a bunch of people trying to get short this thing or a lot of people talking it down. But my God, if you want to talk about something that looks strong out here, and that's that $92 level on the dollar index. It looks like every time it comes back down, kind of looks like the S&P and NASDAQ did for a year where every dip was bought. But right now, 92.41, which is kind of counter to what you would think gold would be, right? You'd think that if the dollar index would come down, this thing would really start to rock. When it came down, it's actually when it started moving back up that you got the most move in gold today. So kind of interesting. To me, there's a lot of things that don't quite make a lot of sense right now, and certainly when you get single actors out there or lone wolves, like we had with Switzerland today, you get a lot of displacement. The question is what the truth is. I thought that it would hit 92. I know a lot of people thought the dollar index was going to stop around 90, but to me, it looks like 98 is a real possibility out here, the way this thing's acting. Anything else?
Yeah, after the break.
Okay, we'll get to you on the other side. Hang on, and we'll come right on back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back on the line with Danny in Atlanta. What else would you like to talk about?
Can you do the same thing for the SLV?
Yes, we can. In fact, I'm so busy with the positions I have on, I really didn't look at the metals market. I probably should have, though. And no, we've got two of these things up. Let me find the other one here. I've got so much stuff going on my screen right now that it seems a little tough. SLV, I haven't looked at these. 19.5. So why it's probably not going to get there. I think if you wanted to hang on to see what happened through Friday's close, probably not a bad bet. So, like I said, a lot of people on the wrong side of this trade. Once it broke 1225, 1228, that was pretty much the Rubicon for all this. But kind of very interesting to see how SLV's the redheaded stepchild in this thing today, and tells you probably a lot more. I know Andy's back today, going to tell you more about the fear trade than the actual supply demand. Supply demand doesn't look that great on silver, but and or the fear trade, but the fear trade really looks like it's centered on gold. So yeah, I don't know how much more there is for you in the SLV, but certainly looks like the better play out there is gold at the moment.
Okay, great. Thanks, Dave.
You bet. Okay, what else do we have going on out here? And we've got Riley from Adventure, Florida.
Hey, hi, Dave. Dave, I got a question. It's a two-pronged question, if you don't mind. It's you mentioned at the very early of your show about the bias is looking like will bias higher towards Friday.
The option market makers will make more money if the probably at about 2020 on the S&P cash. The option market makers would probably want it to pretty much close around there 2025. And that just means that the most amount of the options will go unexercised at expiration.
We're a long way away from that right now.
2025, that's 25 points.
Right, that's a good rally.
I think it's pretty small, actually. But I have much longer time horizons than I think maybe a lot of people that are real quick traders. But to me, that doesn't change anything in any of the positions I'm holding. In fact, if you've listened to my show for a while, I've gone out to April for some of my puts. So to me, 20-point move really in anything. So
right, but you mentioned the fact that biased towards the end of the week, positions. So my feeling is then the rally is probably going to have to start either in that next hour and a half or one big rally tomorrow.
It could gap up 20 points.
Yeah,
that wouldn't be a big deal. And
no, you're right.
They could just now. Here's kind of interesting things because we are getting a lot of expiration games out here. In fact, talked to Z in the den this morning about Best Buy. I knew that was a horrible made-up story yesterday, right before the close, that Samsung was going to buy them out. But this, you get into options expiration, you get into a lot of these games. And as far as I can tell, that's exactly what we have is a great deal of games. And suddenly the Swiss came in there and threw a wrench into the works overnight. And now there's a lot of people trying to play catch-up because all they wanted to do is see this market kind of go out at about 2030, 2025, 2030. They'd be ecstatic if it got to 2040. But there's literally billions and billions of dollars if they can get this market up just 20 or 25 points. So go ahead.
Okay, may I ask you? I've been watching natural gas.
Mm-hmm.
For some reason, I thought the trader UGAS, UGAZ, and DGAS, DGAZ. I'm getting things mixed up here, but I always thought when the natural gas goes up, UGAS would follow.
Not exactly. Now, first of all, this is an electronically traded note, not an ETF, right?
I didn't know how. I know it, but I don't know how to decipher exactly what that means, all right, to be straight with you.
Okay, I'll probably talk a bit about it tomorrow since there's so much going on. My guess is that tomorrow is going to be a fairly flat day, and I'll talk about it at length tomorrow. Electronically traded notes do not have a structure behind them that is guaranteed.
Hold on. Could I hold?
Yeah, we'll talk a little bit more about it, and I'll expand on it tomorrow. But yeah, hang on through the break.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, hopefully we still have Riley on the line. You still there?
Thank you. Yeah, Dave,
Okay.
if they start the day off tomorrow, right where we close today, just in conversation, and these guys need to get the SPX, they need to pump the stocks up, and there's not a lot of volume. Does that make it more easily for them to have that opportunity to artificially work the market bias upward?
Lighter volume, yes. Mostly all these guys are going to be in the same boat, though. I mean, it's not like J.P. Morgan has gone heavily short and everybody else. The overall amount of money in the market normally gets spread out. You don't find one market maker with deep pockets that's going another way. They are agnostic as to the true moves in the market when it gets down to the last 7 trading days. So it is one of these things where ideally they want it to track in, and it's nothing for them to go out and get their shills to go on CNBC and tell everybody, starting probably tonight, about why you should buy Apple, why you should do this, why you should do that, right? And then they'll come out with 20 upgrades tomorrow, and they can move the market for a day or two. That's all they need. So it's not that they don't care what the price is on Monday. All they do is care about what the price is on the close on Friday. So,
Well,
so that's all they want to do now on the ETF versus the ETN. you should know, because it's already happened in the last couple of years. An ETN, let me cure that because I put the wrong thing, is an electronically traded note. And the big difference between an ETF, like the GLD, is they physically buy gold. It is backed by the gold that they own, and it's audited each year, or probably even more than that. And even if they went bankrupt, you would have some of your money back, probably most, if not all of it. An ETN is like a bank, but they may not own anything underneath it. And you will normally, because they don't have any of the physical, either the equity or any, in this case, any natural gas whatsoever. All they are doing is playing the futures. So if there's a huge contango in any of those futures contracts, they come right back into the price of the ETN itself. So one, you're taking a lot more risk on going to an ETN, and you should know whether you're in an ETN or an ETF, because you're going to need to make a great deal more money to make up for the risk. And like I said, I can't remember the ETN it was, but it was less than 2 years ago that went pretty much belly up. Maybe something that Den can remember which one it was.
I'm trying to help you, but I do. It was a UVXY type of deal.
Yeah, it was. And that's why you have to be very careful about doing those and make sure that you have IndieX?
No, it was a UVXY type of a UXVY, something in that VIX category.
Yeah, it may have been the VIX on the NASDAQ or something else. It escapes me at the moment. It doesn't really matter. But that is something you should be aware of, because there is a very high risk, because these guys are playing the futures out there. And the way that it works is they can make a great deal of money using your money. And that is not usually a place I want to be trading against a bank who knows the other side of the trade, too. It's kind of like playing a guy that has poker, but he gets to see your cards, but you don't get to see his. So I am not a big fan of ETNs. Occasionally, it's the only way you can go. Just know that you can lose every single penny in it. My guess is that even if the GLD went bankrupt tomorrow, you'd probably end up with 90 or 95% of the value of whatever gold they had at the time. So,
Dave.
Yeah.
The question, though, when one wanted, maybe Andy has a more direct line on this, because he's talked about the U-gas and the D-gas last year. I mean, today, the NG.
The answer is in the way that the futures move. Okay,
well,
they can't go into. The answer is the way that the futures move. If you go out and do a Google UGAS and start looking up the documents that are going to be available for it, it's going to tell you something like they're buying the futures for 3 months out and 6 months out, or 1 month out and 2 months out, or something like that, right? So if you've listened to Andy lately, in fact, I'd recommend you calling his show. He said, well, there's one of his ex-bosses always had, he was either selling the close one and buying the close one and selling the far out contract on oil, or there was always some kind of super complicated way that the things were put together. And that's what those ETNs do. So what you can see is that one of the contracts is not doing so well, like maybe the long-term contract against the short-term contract. So you see U and G move a whole lot. You see natural gas move a lot. And then you see this ETN do something weird. It's because there is a contango between the contracts that these guys have out that are long or short, and they don't own the physical at all. They own zero natural gas in that ETN. And that is the difference. If you go to something like UNG, where it still happens somewhat, there's probably a great deal less, or the contracts are closer, or there's something like that. But you have to dig in the documents that tell you exactly what that ETN specifically does. And they are available on the internet. They're posted to the government, and you can find them. But that is part of playing these both ETNs and ETFs that basically are leveraged, because they have to go into the futures market to gain that leverage. And they don't buy just what's out in 30 days. They'll buy a complex thing where they maybe go 30, 60, 90, right? Or even 2 months, 6 months, and a year. And there's going to be kind of a curve where all those things come back together. And because the far out contracts can be different than the close up contracts, which Andy does talk a lot about, that can create that contango. And we saw it in the VIX today. If you looked at the UVYX, there was times when it was up 5% and then the VIX was up 12%. That's exactly what's happening in a lot of these contracts today. And it's just not in natural gas. It's other things too.
Well, thank you. This is good information, but I think walking on quicksand would be safer than buying U-gas or D-gas.
They may or may not. You need to check them out. The only difference is you have the possibility, not the probability, of losing 100%, which is something I dislike. It may be the only way to play it. And to tell you the truth, if you had the option of maybe playing the futures versus something like that, the most you can lose in an ETF is 100%, but you might lose 500% or something in a future, right? So it's all relative, and you have to understand the risk for the particular product you're playing with.
Yeah.
But normally for a retail investor, I would shy pretty far away from ETNs.
Definitely. Good advice.
Okay.
Thank you.
Good enough.
Thanks.
And what else do we have? But yeah, if you catch Andy, maybe he'll talk more about how his ex-boss, Andy Hall, put those complex trades positions together on crude oil. And that's exactly what these ETNs and ETFs are doing also in the futures market to gain the leverage. If you're talking about something that just tracks exactly what natural gas does, then there's not a lot of witchcraft going on behind the curtains on it. But once you get into ETNs that are leveraged, they will have very complex positions that may have 2 or 3 times in one contract what they have in the closest contract, or vice versa. And that ends up, when those long contracts come out against the short contracts, making the ETNs and ETFs move very differently, at least in the short term, than you think they should. Normally in the long term, they come back out, and that is the way that these big guys like Andy Hall and even the people that ran long-term capital management worked it. They were betting that eventually everything came back in line. Now, sometimes they do not. So there's always a risk, but almost all these ETN ETFs that are leveraged, like the VIX ones, like any of the rest of them on the S&P, all have those same kind of issues. And the longer you hold them, the longer those things will kind of iron themselves out. But in the short term, they can be, especially if you're playing fairly close, can be rather violent. You will think they're violent, and then 6 months from now, you look back and there's a little squiggle. But the first couple of days of a trade, even if you're right, can see you losing money on some of those. So just watch out. Anyway, that was just one of the few things that we're talking about. How much time I've got left. Wanted to get into some of the other things that we're moving out here. And part of that was Target. And what did I have for Target out here? They're blaming Canada at Target. This thing jumped up today because they said that they're leaving the market in the Great White North. And it's faded off of the highs since then. But one of the few stocks bucking the downtrend. Let's go back here and look at the S&P real quick. 2,000 on the S&P cash, 2.9 billion shares. That is very interesting for the volume, because we've been wondering whether Friday would be a big day in the market. Normally, if you have a lot of volume on Thursday before the expiration, you see the market doesn't have a lot of volume the next day. And 2.9 billion shares on the consolidated New York Stock Exchange tape is pretty brisk. So that would pretty much say that you're probably looking for lighter volume tomorrow, and most of the action out here today. As I said, they could pop this thing up 10, 15, 20 points tomorrow, and maybe it closes at 2010 or 2020, something like that on the S&P cash. You know, maybe we get another surprise and it blows the lid off that. but the bias or the magnetism or the gravity would normally be for the option market makers and those with deep pockets, just to move this market up just a little for expiration tomorrow, and maybe the people on the street will end up with another 500 million or $1 billion between them all. But right now in options and futures, that through expiration tomorrow, you probably could see $500 billion in that market, if not more. And if they can just move it a little bit, maybe there's $5 or $8 billion to kind of push back into the coffers of those people that maybe were betting a little bit too bullish for this expiration cycle. So just keep a lid on that. Of course, some of the other big surprises out here was the Bank of America. Of course, they're all not blaming Canada. They are blaming the government for coming after them and catching them with their hands in the cookie jar. Maybe Andy will talk about this on his show today too, and that is just how much that it's almost an iceberg where you only see a little tip of it, but there's a whole bunch where these guys have all exited the gold carry trade and some of the other things where they were warehousing stuff. They also had, of course, all the LIBOR scandal and getting out underneath that, and they've been fined quite a bit. Now, probably the one interesting thing down here is we are breaking, so far, the previous low of October 15th on Bank of America. At 1543 on October 15th, you had 210 million shares. You got 130 million shares today, so it's going to be a little bit light. So I would not be surprised to see maybe a few of these pop back into the trading range tomorrow and gather a little bit more steam for the next move down. So interesting at the same time. But again, we're not at the lows, and we've got an hour to go. So my guess is we close at somewhere around 2010. For the close today, they pop it up to 2020 or 2025. Tried to hold it up there till Friday's expiration, and then we see the real crack in the markets happen next week. Just about everybody has come out with some kind of nasty thing, and like Best Buy, another one of these companies coming out and warning, and their margin's going to be down. This thing got hit a lot harder earlier in the day, but certainly broke through the previous low of December 3rd at $35.17. Already, that had 14 million shares. We've already broken through that today with 33 million shares. So a lot of this thing was coming out. Just looking through a few messages here real quick to see if there's anything else going on. This is such a fast-moving day that I don't want to get too far behind what's going on in at least the news flow. Got a lot. Can you look at natural gas? I guess natural GAD. Probably should have been natural gas. Don't know who sent that name. Natural GAD again. And what's your target for the S&P 500 next week? We'll get into that. But whoever's asking me about natural GAD, I suspect you're talking about natural gas. No? Be back in a minute.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And another email question out here. Probably get to, or maybe it was in the den. Oh, there it is. Dr. DTO. Says, what does the SCCO look like? And Southern Copper, a nice little bounce out of here. And again, I suspect that we're probably going to see a little bullish bias on this until expiration on Friday. But I was talking to Andy Heck before the move, and it certainly looks like he's got the bead on copper out there, and I think looking for it to go to $2.20 for the next move. But he can probably talk about that in the next hour with Tom O'Brien. But it is, I think all these things look deflationary out here, and whether it's copper. In fact, I was recommending a new title for one of his articles to be "Copper is the New Black Gold." How about that? But a lot of these things, and the question is whether or not the SCCO is going to go back to long-term lows. And I don't see any problem why this thing certainly wouldn't come back and test the October 4th, 2011 low at 22.58. But we can even go back out farther than that. And what is that? Let me snatch just a little bit more data here if I can get it. I think it's coming out. Come on. Internet's slow right here for the moment. But anyway, it is You got that 2258. That's probably where the first support level would come in. But it's hard for me to see that these things don't already have plenty of energy. And, especially in SCCO, looks like you've got more than enough evidence to suggest this is an ABC down. You broke it with volume today. Now it's closing a little higher than that, so it may go sideways for a little while. But certainly an ABC, I think you could probably make a good case that this thing maybe for expiration goes higher for a few days and then continues this move down in the channel. And let's see, 42 to 24. So that's 18. So that'd take you to about $15 on a 1-to-1 ABC down in Southern Copper. And it certainly looks like copper at 220 or below. And I think Andy even thinks maybe 150. But we will listen to him in his shows later today. But I think everything I'm looking at says deflationary. Everything I see says stronger dollar. Now, maybe that changes. And if the evidence changes, I will change my opinion. But at the moment, certainly looks like we are in kind of a deflationary spiral in many of these markets. And my guess is when the history books are all told and written, they're all going to say the fallacy of trying to move the markets as the Fed has over the last 2 or 3 years by throwing money at the problem. And we all know, basically that was exactly what the Fed was thinking at.
Are you suggesting we throw money at the problem?
Precisely.
That was, I'm sure that was lifted from a Fed meeting out there. But to me, it was always emptying a bucket of water in the deep side of the pool, only to take it to the shallow side. And the one thing you can count on, especially in financial markets, is the problem of unintended consequences. And you never quite know what they're going to be when you try something new. There were some other options that were probably better off. Certainly, all the QE, I think, is coming now home to roost. In the meantime, so when you can, not when you have to. We'll see you tomorrow, same bat channel, same bat time. And hang on for Tom O'Brien and then Andy Heck.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.